crypto miner Marathon Digital mining a record 615 Bitcoins in October. Marathon further increased its hash rate by 84% in October in setting its new monthly high. And joining us to discuss just that is Fred Thiel. He's the CEO of Marathon Digital Holdings. Fred, great to have you on the show. So Marathon Digital mined in October many Bitcoin, and it almost 615 almost matches the 616 it mined for the entire third quarter. How is it even possible?
Well, we had a big shortfall from the transition out of our hardened facility in Montana, which we fully exited during the quarter, and then we brought our King Mountain facility fully online with 69,000 miners during the same period. So there was this nice transition, and as of November 1, we're performing around 7 exahash, and we're continuing to deploy miners. As we've said in our previous releases, we still expect to be at 23 exahash mid 2023. And we continue to deploy miners both in Texas and then later this year starting in North Dakota, together with our partner Applied Blockchain. And very excited about the progress we're making. Obviously, the thing we're most excited about is the miners we're deploying now are all Bitmain S19 XPs, which are the most energy efficient miners out there, which are 30% more energy efficient than the S19J Pros that most people have deployed. So in times of high energy prices and low Bitcoin, it gives us a very core strategic advantage relative to our cost to mine Bitcoin.
So how are conditions for miners now with rising energy costs and depressed Bitcoin prices, and how are you able to buck the trend?
Well, yeah, I think part of it is our model, this asset-light model we've been talking about now for a little over a year and a half, where essentially we don't invest in the CapEx and the heavy CapEx costs of the infrastructure, but rather we partner with operators who build out the sites. They bear the burden of the CapEx, and we provide miners and mine. And due to our scale, we're able to negotiate very attractive prices for ourselves. But what that does is it means that all our CapEx really is just focused on buying and deploying miners. And so unlike some of the other miners out there who are either vertically integrated, developing their own sites, they have very large upfront CapEx expenses relative to site development that we don't have. At the same time, we're a very lean operator with amongst some of the lowest cost to mine Bitcoin in the industry. And that's really just based on our model. So we are very focused on being agile and evaluating opportunities in the marketplace as they arise. We were very successful in 2020 and 2021 in raising sufficient capital to be well positioned for this marketplace. We have very little debt, very little current debt on our balance sheet at all. And we think we're very well positioned to weather the balance of this winter and be extremely well positioned as things come back in due course, because we'll have this very large fleet of highly energy efficient miners. And we think we'll be able to be definitely one of the leading and most dominant players in the industry.
And yet Marathon Digital is exposed by $81 million to Compute North, which was a hosting partner of yours going through bankruptcy right now. So what happens to those funds now?
So you need to look at kind of what the makeup of that 81 million is. So a large portion of it, 50 million, are actually deposits that are prepayments for energy and other things, predominantly tied to the King Mountain site, which is not part of the bankruptcy. So that site is fully out of the bankruptcy. Though that asset is being sold, the Compute North portion of it is being sold as part of the bankruptcy process. But that site was not part of the bankruptcy. So 50 million of the 81 million were deposits related to energy payments and hosting. And then there was $10 million of preferred equity and roughly $21 million of a loan that was made to Compute North. So if you think about the kind of immediate exposure right now, obviously the equity investment that we made last year will likely be washed out. And then, the loan we still have to see, but the deposits we feel are still good.
Are you hopeful that you'll get those funds back through the bankruptcy process?
Well, yeah, the deposits essentially you eat down as you consume power, right? So that's kind of the way that model works. So we continue to work with Compute North and the other owner of the King Mountain site as it goes through this process. And so far we think things are going in the right direction.
Are you surprised by the compensation and bonuses handed out to executives right before declaring bankruptcy? Do you think that's appropriate given they owe creditors like you money?
I'm not going to comment on that.
All right. You also mentioned you have some new facilities under construction. What's the progress on that?
So things are going well. Applied Blockchain is building a new site in North Dakota, which is behind the meter at a wind farm, similar to our other facilities that we're now operating, all focused on being behind the meter renewable energy sites. And the Applied Blockchain site, they've laid foundations at this point for the buildings, and so the building process will start on those locations. And so the North Dakota sites will come online early next year, and there's a Texas facility which we're currently in the process of deploying miners to, which will start coming online before the end of this year.
Fred, is there any further concern that there may be more bankruptcy in the mining industry given the bear market, the high energy costs, or do you think that has bottomed out?
So I think there is likely more to come. Obviously, Core Scientific was a big one, and that story's not done yet. I believe that Mike Levitt's a good operator. He knows what he's doing relative to financial markets. He knows how to deal with lenders and restructure debt. So I'm sure he'll find a way to do the best he can in this process. Argo is another story. They need capital to complete their site and get their PPA. That's a bigger problem, I think. And then as you look down kind of the list, there are a number of other operators who either don't have the capital to fully deploy the sites that they've built, or don't have the capital to finish the sites that they've built. And so you're going to see people who are in a position where they're either going to sell the miners they have on order, or potentially sell miners to raise cash to be able to finish building out their sites. But the winter time is the worst time to be trying to sell assets in this space. So I think we will likely see a number of other companies have issues here. We'll just have to ride it out. But at the end of the day, similar to in prior winters in this industry, the players with the strongest balance sheets will survive, come out the other end, and thrive. And
do you think
we're very focused on doing that.
Provide further pressure, selling pressure on Bitcoin going forward?
No, I think if you think about miner supply, which is kind of what you're alluding to, a lot of miners have sold all their Bitcoin. I think we're one of the only miners, other than maybe HUD 8, who hasn't sold Bitcoin at this point. So we have over 11,000 BTC on our balance sheet now, making us most probably third or fourth largest holder of Bitcoin of publicly traded companies in the US. We don't have a current need to sell Bitcoin. So as we previously said, we'll continue to hodl until we feel that it makes sense for us to sell some Bitcoin to cover our operating expenses. But we're very bullish on Bitcoin. We continue to be bullish on Bitcoin. And we think that we're getting to the end of the macro events that have been really putting pressure on Bitcoin. It's not a supply issue that's putting pressure on Bitcoin. It's a lack of demand. And I think that demand will begin picking up again once we're through kind of some of these macro events that we have facing us over the next 6 months.